Hello and welcome to Commodity Champions. I'm Manisha Gupta. And metals have seen a massive sell-off in the past 1 month. Zinc prices have slumped from more than $3,500 a ton on 26th of Jan to below $2,400 in this month. The prices are hovering near 24-month lows. Copper is also at a 6-month low, so is aluminum, and other metals like iron and steel have also met the same fate. So what is it that is hurting the prices? Joining me now to take this forward is Guy Wolf. He's Global Head Market Analytics at Marex. Guy, hi, thank you so much for joining us. And it has been quite a whirlwind of a month, the previous one. And I want to start with zinc because the underperformance really has come in from this metal, even as the fundamentals are not so bad. But what would you say, where would zinc prices see a support now?
Yeah, I think zinc is probably it actually represents a lot of what's going on in most base metals right now, which is that the macroeconomic environment is not strong enough in the here and the now to push prices higher. I think zinc is sort of somewhat unloved because it's not seen as a sort of a battery metal per se, even though it's very tied into the steel industry, which people typically see as cyclical. But I think all metals at the moment are suffering from, a degree of sort of hope and expectation that happened at the start of the year. Hopes for sort of, as a Chinese reopen came through that would lead to a sort of strong rebound in demand. And that hasn't really happened. Demand's been quite soft, combined with obviously a very different interest rate environment than we've had in recent years. So if you don't need the metal today, you're not going to buy it and warehouse it for a period of time because the cost of that now is just very different. So yeah, really, it's just relatively short-term softness in demand, which is just leading to this sort of constant drip, if you like, of supply. Against that, there's actually sort of a very strong underlying sort of more medium-term story for most base metals, which is a sense of what people sort of got ahead of themselves on earlier this year, which is that all base metals, and I'd include zinc in that, because you're going to need a lot of galvanized steel for wind turbines and all sorts of things that we're talking about in this energy transition. But in general, whether it's copper, whether it's nickel, aluminium, zinc, they all are very much a key part of that sort of energy transition story, and demand should come through over the next few years. And combined with that, there's been relatively, almost no investment in new supply in metals like copper, and indeed zinc. Zinc's got a very strong supply side story as well. But you're just in a world right now where it's very sensitive to short-term fluctuations in demand because there's no real inventory buffer, and people don't want to hold metal that they don't need immediately, and so that's what we're seeing.
Guy, I get your point that almost all metals are important when we talk about energy transition, but copper, which is also called a doctor copper, has seen a recent sell-off. We've seen a 7-month low, and it hasn't come off its recent lows also. How are you looking at copper? Would you still refer to it as a doctor copper? And what is it telling you about the economic barometer or the kind of recession fears that the markets are looking at right now?
So I think, again, very similar pattern. Most people are very bullish on copper, sort of 2 to 3 years out. That again, no real supply coming through. Demand is predicted to carry on increasing, so that market is going to be in deficit fairly soon, and it takes a long time to bring new supply on. The problem is that that's not the same thing as being sort of in deficit today, right? And I think what happens is people sort of get ahead of themselves, get a little bit too excited about the sort of the 3-year outlook, get positioned on, but it's not like the equity market. Equities can price in future profits today, but commodities are ultimately going to be anchored for whatever's going on immediately. And I think that's really what we're talking about. We have not seen the pickup in demand out of China that people were hoping for out of lockdown. We have seen recently some slightly more positive signs coming out of the ferrous space and from the construction sector. But, China is not about to launch a new sort of wave of construction, that they clearly over-constructed, over-invested on that front. So I think it is, unfortunately, it's a little bit bland right now in terms of the demand drivers. There's no sort of big surge of demand coming through. And that's what's leading to the price softness we're seeing.
Guy, if you look at the copper prices coming off its all-time highs that we hit in the previous year, from where we stand right now, we are nearly $3,000 off from those kind of levels. What's your sense on the price moves from here?
Well, I mean, we've seen much higher prices in very, very recent periods. I think we're in an environment where it doesn't take much, for the market to sort of swing quite aggressively and sentiment to turn as well. So, I easily see copper above $9,000 a ton in relatively short order, because in the same way that people don't want to hold inventory if they don't need the metal today, it is also the fact that when they do need the metal, there's really very little inventory out there to supply them, and so they just will have to buy it at whatever the market price is in here and now. So it's really going to be the sort of mirror of what we're currently seeing. So I think when demand turns, prices will probably actually react pretty aggressively to the upside to that.
All right, $9,000 a ton for copper is not too far, but what's your sense on zinc, and what is the range you're expecting for it? Because this one is clearly oversold on the charts. We've seen 35% of decline from the highs in this year itself.
Yeah, so zinc is obviously, has been the weakest price performer. It's probably actually the one that's actually still got sort of a certain amount of speculative positioning in there on the short side. It's not hard for zinc to rally $500 a ton in a month, just on a relatively small shift in the underlying demand supply balance. So I certainly wouldn't be negative on any of the metals at these sort of prices. It's just the timing aspect of when to buy them.
All right. Moving on then, let's talk about aluminum also, because there have been output concerns from Europe because of gas, and then in China because of power concerns. Nickel as well is looking at strong fundamentals. Where do you see prices for both of these?
Yeah, so actually a nickel, is actually probably one of the ones where there actually is supply coming through. As ever with commodities, the more excited people get about the future demand, typically the greater the supply response. And so whilst the sort of story and the excitement around demand for nickel driven by EVs is actually true, it was people were getting excited about that 5-6 years ago, and a lot of new supply is now in the market. But if you look at the breakdown of nickel demand, it used to be almost exclusively for stainless steel, and in the last sort of 5-6 years, electric vehicle battery demand has moved from about 10% of overall nickel to 40, nearly 50%. So it's not as though that sort of story and the underlying story is incorrect. It just has been met with supply response. And aluminium, to a certain degree, similar. It's one of those metals where there's quite often supply, simply because people, if there's excess power, people tend to smelt aluminium. So aluminium is one also where there's not a significant concern about a lack of supply. I think where those sort of factors are most acute is in copper, and actually zinc. It's just that people are more at the moment excited about copper. It's just seen as more of a sort of critical metal for the decarbonisation agenda. And zinc is almost ignored, but zinc also has, in terms of, sort of the next sort of 5 years or so, a great supply side story, i.e. there's no new supply coming on.
All right, so you're saying that copper and zinc perhaps have more supply concerns than the other metals there. But many of these metals clearly have been reacting to the movement in the US dollar, the debt ceiling crisis in the US, and then other economic data which has been on the weaker side from US and China too. Would you say individual fundamentals on one side? It clearly has been the macro taking over that.
Yeah, I think China is always the biggest demand factor. So I think it's always the most critical. But the fact is also, we can't deny that the rest of the world also is going, and unsurprisingly going to be going through economic slowdown, simply because the interest rate environment is just so fundamentally different. That whether we're talking about the US debt ceiling or not, the truth is that general households, having just gone through an intense increase in energy costs, which has alleviated slightly recently, we're now seeing that coming through in food inflation, and obviously cost of debt, mortgages, and so on. So without a doubt, there's a squeeze on discretionary income, globally, and that's always going to have a slowdown and hit demand for metals. So, all these things are important factors for sure.
You told me earlier that you're not looking at China really rushing towards the infrastructure or real estate as a sector in that sense then, and because 40 to 50% of many of these ferrous metals are consumed by China, steel and iron ore prices, where do you see them headed? They're both trading at around 6 to 7 month lows. We've seen this year start on a weak note, and then we've further gone down from this.
Yes, again, obviously super sensitive to things like construction in China. Unsurprisingly, and again, China had seriously over invested in construction over the last sort of 10 plus years. New household builds have run miles ahead of new household formation, and so that has been, really over the next sort of 10 years plus. That's really the outlook there is very, very poor. Having said that, like everything will move in relatively small cycles, and like any government, you never want to see property prices collapse if they've run too far ahead. So what you sort of hope for is to sort of try and manage that, and gradually, hopefully, wages will increase and sort of solve that problem. So I think we've definitely been in a very, very weak period for demand for housing in China, but actually in the last sort of month or so, we have seen some small positive signs, pickups in some of the first-time buyer type data coming out of China. So it's not all doom and gloom, but this is not a new Chinese super cycle either.
All right. So if you had to recommend which metals to buy, one to buy and one to sell, which are those two metals that you would pick on both sides?
I think copper down here is definitely the best buy, because sentiment on that now has really been squeezed out, all the positive sentiment, but it will come back very quickly, I think, with positive price action. I think nickel, to be honest, is probably the one I favour the least, simply because there is a lot more supply coming through, and it will come through regardless of how quickly demand picks up. So I think nickel, even if we see a turn in the macroeconomic environment, is perhaps less geared to that than some of the other metals.
All right, so copper is favored the most and nickel the least, and that's exactly how we will go ahead in case of that sector. But let's also talk about the precious metal prices, Guy. How are you reading the impact of macros on gold and silver? Among the two, what would be your top pick here? Where do you also look at the dollar index moving from here?
Yeah, I think obviously gold's always going to be very, very dollar sensitive. But I think in a time where people have more macroeconomic concerns, obviously it has a sort of typically catches slightly higher demand. So I think, again, hard to see why gold would be materially weak in the near term for those factors. Silver, though, I think is particularly interesting. I think that it's unappreciated as an energy transition metal. It's a major input, required input for solar panels, and as the sort of expected increase in demand for solar continues, it's becoming cheaper and cheaper and cheaper. That's going to have an increasingly large proportion of global silver demand. So I think silver is not just the sort of industrially sensitive precious metal that it used to be. People used to look at silver gold ratio as some people used to include silver within the industrial metals rather than even as a precious metal. But I think now that actually has a very strong underlying structural demand story from the decarbonisation agenda, which is seemingly what I find people don't talk about it anything like as much as they do with copper.
All right, so buying into gold and silver, also copper and zinc going forward. Nickel is the least favorite, is what Guy Wolf of Marex tells us. Guy, thank you as always for joining us on the show. And with that, we'll head into a short break. But coming back, we speak to Freddie Swan, who's Danish ambassador to India, on green energy transition, India's net zero carbon emission goals, and the need for climate financing.